Hey, what's going on, team? It's Ricky with Tech Solutions here with a quick stock market update. I hope that you guys learned something new, and if you do, please consider dropping a thumbs up and subscribing. So I actually just sent out an update to our Learn Plan Profit traders. Make sure you go to the trade idea section for a setup that offers 6% upside, and then I have my stop loss set at 1.5%. So my risk to reward ratio is definitely my favorite. It's looking a little bit more promising, but a question a lot of you guys might be asking is like, why is the market selling off? Why is it doing what it's doing? The GDP report came in today, and it came in as expected. I uploaded a video yesterday talking about specific expectations. Expectation was set at 0.6%, a decline, right? Negative 0.6%, and it came in at exactly negative 0.6%. Now, why is the market selling off so aggressively? Well, you have to understand, when this GDP report was released 1 hour before the market opens, there was some form of volatility, but it was actually nothing too significant. The market was already down as SQQQ was up. But why? And it's because of what is happening overseas. So London stocks dive on fiscal policy. And again, please make sure that you look a little bit more into this. But it's other economies are not doing well around the world, and it's simply influencing the overall market. On top of that, just for the cherry on top, we also saw that Apple stock got downgraded, and therefore, again, more selling pressure began for Apple. You can see that Apple is making new lows based off of recent patterns, hitting lows of 142 today. At one point, it was down nearly 5% on the day, and you have to think about it. Apple is one of the most valuable companies that's publicly traded, and when Apple sells off, its market cap is so large that it can negatively influence or positively influence other markets, and therefore it just acted as a further negative catalyst for the overall market. So check this out. We have SQQQ right now, which is the bear inverse ETF that's showing signs of a support at the moving average. But if we do see that break below the moving average, then again, we can make our way back down to previous lows, which is simply where we opened at. And again, I'm sure you can do the math to determine what the upside potential is if the market begins to slightly recover as SQQQ begins to sell off. But again, we still have to wait for confirmation on that. So if you're part of my Learn Plan Profit group, I will keep you up to date on this in the trade ideas section. One of the last things that I quickly wanted to talk about is what we have set in place for tomorrow. So what reports are set to be released? Well, we have the PCE prices and PMI that's going to be released, and this is all 1 hour before the market opens. It's super important to understand that, yes, these reports do influence the overall market. Do I think that today is super significant? Well, no, not really. In today's live trading session, one of the things that we talked about is that, based off of where we were literally yesterday during the pre-market hours, we are kind of where we are, if anything, a little bit lower on SQQQ. You can look at QQQ and look at previous lows versus today's performance. It's literally like we just gave back everything that was gained yesterday. This is a perfect example of choppy conditions. This is why you watch your position size, and this is why I was so willing to reduce my position size yesterday as the market pushed up. Why, Ricky? Why would you want to sell? I thought you were bullish. Yes, but I understand that the market is more bearish than it is bullish right now. So therefore, I feel like I have less ground to stand on as the market has continued to show signs of bearish conditions. Now, this shouldn't instill fear for you if you're a long-term investor. It just means that you have to be selective with the stocks you choose to invest in and the dollar value that you put behind those specific investments. So I'm still very excited to follow up to see where the market ends up going. I still think that Apple is a great stock to invest in overall long term. Now, we can't expect this thing to recover overnight, but from where we're at right now to previous all-time highs, it offers 27%. And in my opinion, Apple is one of the most bulletproof companies out there, following Amazon and as well as following Google and Microsoft. And all of those are very oversold right now. So of course, things can get worse before they get better, but our job is to prepare, not predict. So therefore, I think during down markets is the best time to prepare for the up and coming future. So if you have any questions about what we talked about today, I hope that you know that you can always direct message me via Discord. I respond to all of my direct messages messages, and that is that first link in the description down below. If you don't see the link, refresh it, and it's in the description of this video, and it's listed. Message me on Discord. Again, one of the things that I quickly wanted to summarize is the GDP report. So why is a third decline maybe not the worst thing? Well, the good thing about a decline, again, it's short-term pain for long-term gain. The way that I view it is that the Federal Reserve, the whole reason that they've been raising interest rates is to apply pressure to the economy to slow it down. And if they see that quarter over quarter with these GDP reports that it is slowing down and that it is contracting, then therefore they can hopefully be less aggressive in up and coming interest rate hikes. Now, if this thing came in better than expected, meaning that if it came in that we didn't decline, that would have been a good thing for the quarter maybe, but overall the Federal Reserve would not take that as a compliment. Just imagine the Federal Reserve is like trying to put out a fire. They're the firefighters. Our economy is what's on fire. They're trying to put it out or at least calm it and contain it. And if they see that the fire is not being contained, then they will only be more aggressive in how much water they use to control that fire. And I think that's a great analogy when having or trying to have a better understanding of what's going on with our current economy and why the Federal Reserve wants to push and slow down our overall economy, and why the GDP report that was just released not actually that bad, right? Overall long term. So again, I'm excited to follow up. It looks like SQQQ is showing signs of a support right at that moving average. We are now breaking above the EMA, and we'll see if we actually form some higher highs and higher lows. So I'm excited to follow up. Again, make sure you guys message me on Discord. That's the first link, or make sure you guys follow me and message me on Instagram, and that's that third link down below. Friendly reminder, I do trade live every single day, and if you want to watch me trade live as soon as tomorrow, we are running a sale right now, and it's $100 off, and that's that second link in the description down below. Hope that earned your thumbs up. Please consider subscribing, and like always, let's make sure that we end the year on a green note. Take it easy, team.